All right, my name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about foreign account reporting. So if you are considered a U.S. citizen for tax purposes and have financial accounts that are based overseas, you do have an obligation to report them to the United States. Such accounts would be like bank accounts, brokerage accounts, in some instances, retirement accounts, cash value of insurance policies. I believe that falls under it. But the main thing you need to be concerned about are mainly bank accounts, stock accounts, brokerage accounts, and retirement accounts. Those are the three main things that I see. And if they're located in financial institutions based overseas, not necessarily if you're overseas, but if the account is in an institution that is overseas, you have to report that to the United States, but there are thresholds for that. So now the funny thing here is you have two different reporting requirements for the same information that go to two different sources. So there is a reporting requirement to the Department of Treasury, which is called the FinCEN or FBAR, Form 114, not to get too technical with it, but you do have a reporting requirement there. But then you also have a reporting requirement for the same information to the IRS. And it's actually two different forms that you have to fill out. And both can be submitted with the taxes, but the FBAR, which is to the Department of Treasury that you need to report this to, that can be filed on its own, but you can also file it with your income taxes. And IRS reporting that obviously needs to be filed with your taxes. The thing here, which is strange, is that it's essentially the same information. And why these two don't work together, I'm not sure. But there are two different thresholds requirements, so maybe that's why they don't necessarily work together, and they actually serve two different purposes. That FBAR, FinCEN requirement that you're sending into the Department of Treasury, that's more so to combat for terrorists, to make sure that you're not funding terrorists through foreign accounts. And the IRS requirement is simply just to make sure that you're not hiding money, to make sure that you're not earning money in foreign bank accounts, because as a U.S. citizen, you have to report your income to the U.S. regardless of where you are, and you have to report your income worldwide to the U.S. That IRS requirement is simply to make sure that you're not generating income overseas and not reporting it. So that's the purpose of the two forms. As I mentioned, there are two different reporting thresholds. So just simply having the account doesn't mean you need to report, but there are two different thresholds. So I wanted to walk through it. And for those that have accounts overseas, you would know when you need to file each or if you need to file both. So the requirement for the FBAR or the FinCEN is if you have accounts that have had more than $10,000 in it at any point during that year, because this is a yearly requirement. So if during the course of the year in question, if you've had more than $10,000, this is an aggregate across your accounts, then you need to report this FinCEN FBAR. And when I say an aggregate, it can be a combination of multiple accounts. So let's say you have 4 different accounts, and in each of them you have, say, $5,000. You would be required to report all of these accounts because in aggregate, the 4 accounts at 5,000 is 20,000. So once you hit that threshold of 10,000 in aggregate, you have to report all the accounts. And that's 10,000 at any point during the course of the year. You need to go through the history of the accounts and track its value at the highest point during the year. And that's the value that you use to determine if you reach that 10,000 threshold for each of the accounts. Relatively straightforward as far as what you need to fill out, but you're just letting the Department of Treasury know that those accounts exist. So the IRS actually has higher thresholds, and it depends upon whether you are living abroad or if you're on U.S. soil as far as what you determine as your tax home. The IRS threshold is a bit higher. The IRS wants to know about the accounts if either one of two things are true. If you've had more than 50,000 in these accounts at the end of the year, or if you had more than 75,000 in the account at any point during the year. So not only do you need to track what you had at the end of the year, you do need to track the highest amount that you've had in the account at any time. And those numbers, the 50K and the 75K, that's if you're single. So if you are married filing jointly, that threshold actually doubles for each. So if you are married filing jointly, then those numbers turn into either 100K at the end of the year or 150K at any point during the course of the year. And again, it's the aggregate of all your foreign accounts to get to those numbers. That's if you're located here in the US. If you are abroad, those numbers get even larger. If memory serves me correct, if you're overseas, I think those numbers go up to 200 and 300K. So if you're overseas, then the ending balance has to be 200K or 300K at any point during the course of the year. But that's, again, if your tax home is overseas. It is important to make sure that you file these. I've had a number of clients that have come to me and didn't know about the requirement, and the penalties can be pretty stiff if you don't file these. So you definitely want to make sure that you stay on top of it. If I recall, I believe the penalty was like 100 grand for failing to file this. And you don't pay anything on it. There's no taxes or anything like that to pay on it, but the government wants to know that these accounts exist. And I guess they're going under the premise that if you're not reporting it, then maybe you're doing something you're not supposed to be doing. So you definitely want to stay on top of that. So that's all for now. So if you have any more tax or accounting related questions, feel free to reach out. Happy to help. That's all for now. I'll see you on the next one.